Welcome everyone to the Kendall Report. It is Wednesday night. Well, we finally got the PPI report, came in hotter than expected. And in real terms, we did see some downside, but it wasn't anything drastic. But before I get into tonight, let's go ahead, hit that like button, subscribe, hit the notification bell. You know the drill. So let's talk a little bit. I was up at about 4:30 Pacific time. this morning getting set up for the news that was going to come up. It was interesting, the action overnight. It was like somebody knew something, like this number was not going to come in hot. And we rallied up to the high of the session, was done overnight and about an hour and a half, or we'll call it 2 hours before the markets actually opened physically with all the cash markets. And so we're trading up at 36.35. This is a number, we talked about this in the live room quite a bit today, is that this 36.36 number keeps coming up all the time. It's so far, it's just been a ceiling between 36 and 47, and we just keep getting rejected from there. And there's certainly, as I talked about last night, everything's in a downtrend right now. There's no doubt about that. And there's some major overhead resistance here that's going to be tough to rally above or even get a rally. I talked about a cycle low last night. There's no cycle low yet. We've got a little bit of a bid right now, and that we really needed to close over the previous day high to kind of confirm that cycle low. We couldn't get really any rally at all. Intraday, after we traded down to the lows, we tried a couple times around 36.12, 36.14, got rejected, came into close, sellers over. They just pushed the market down back under 3,600, and we're sitting here right now just a little bit with a little bit of a bid, a little bit underneath the 3,600 level, or 35.94.50. So up 625, nothing going on. Nobody really wants to do anything before the CPI. That's why it was very interesting last night that we were seeing this fairly decent bid overnight coming in through London and all the stuff that's been going on with the BOE, and everybody seemed to be fine with this thing. Market news came out, they slammed the market back to 3,600, rallied, bounced around a little bit, lots of crazy volatility. There was not very good patterns today. And one of the things that continues to happen on days like we had today, and I suspect it's not going to be any different as we come into Thursday's session with CPI coming out, is that the order book is just non-existent. I mean, it's very thin. There's no liquidity again. And liquidity seems to, we can go back, maybe 3 Fridays ago when we had that big downward reversal after the market was up 5.7 and it collapsed on that Friday. From that point forward, there's been no liquidity in this market whatsoever. And it just seems like there's no getting out of its own way at the moment, and everything's negative. So let's talk a little bit about the FOMC minutes. And basically everything that we read, we already knew, right? What people are starting to realize, and what I've been saying, is there's not going to be any pivot. The Fed's not going to change. They got to break something. Nothing's broken yet. You could argue that the markets are starting to act broken, but they're not really broken just yet. And they're not going to move from this hawkish stance. They're going to stick with this. And I keep telling you, and whether that doesn't mean we still can't have like a short-term little rip your face off rally like we had, where we had the 2 days 5.7%, but I don't see that at the moment. But I do see something I'll discuss with you, that we're starting to see the PPMs trying to find a little minor bottom here, and I'll discuss where all the key levels are. But let's talk a little bit about, I did mention this last night as well. Mortgage apps down 2%. Last week down 14.2. So pretty much already cratered that market, and there's not much there. It's amazing that some of these firms are still hanging in out there in these secondary offerings like Rocket Mortgage and all the different secondary offerings. So let's talk about the CPI, and this is going to be the focus. And I think for the most part, folks look at this number as a little more significant. Maybe this is what they're thinking is really hitting the retail market and hitting the public the hardest. it's expected. I'm looking at numbers between 0.2 and 0.4. After the PPI coming in a little hotter, maybe we get the same scenario happen with the CPI. The year-over-year numbers expected at 8.1 to 8.3. So that would be in line with what we saw on PPI. Doesn't have to happen that way. But also remember, as I talked about last night, all these numbers are rear view mirror numbers. These are things that already happened. These are September numbers. So, we've seen, I guess, a firming of some things happen since even mid-September. Crude oil is firmed up because we traded down to 70 and change for just a few minutes on crude, and now we're back at 87. I think, we're trading 87.38 right now. So, we're going to hang around that level as far as that, around these levels. That I'll go through the crude here in a minute. But here's the thing that I think that that folks are starting to look even beyond after CPI. We're coming into the beginning of earnings season, and I think a lot of folks are talking about this, but I'm just looking at things. This might be maybe the final straw to break back, and maybe we can hit. I'm looking at a chart over here I'm going to show you in a few minutes. We've got downward projections to 3,200 and even further than that, 2,900 on the S&P. So maybe this is what breaks the market. We get this next leg down and we blow the market off. And even then, there's not going to be any reason out there for this market to rally. The CS story, the Credit Suisse story is kind of faded in the background. The gilt story's out there to some degree. The 10-year auction that went off today was not very good. So everything is just continuing to deteriorate. And it's really about liquidity, I think, now is what's starting to get a little scary. And I was thinking about something, just kind of ramble on here for a minute. When Jamie Dimon was going off the other day, I think what he's feeling is just all of the frustration that is going on within the banks. And the financials were making new lows today. All of these banks are getting hammered. And the dialogue around that, though, is that the banks are in solid position. They've got great liquidity. I'm not sure that's true. And I'm not trying to conjure up a banking crisis 2.0, but I'm not sure that they're as liquid as people like to think they might be. And there may be other issues that show up. We talked in last night's video, I talked a lot about the yen getting to the 148.50 level being a trigger point. I'm not going to cover the currencies tonight, but that's still a number I want you folks to be watching, because that happens. The BOJ could be all over selling treasuries, trying to support their currency, trying to support JGBs, the whole bit. And they could be, like I said last night, the ultimate seller in the treasuries, and be really cause some real havoc and maybe trigger something way larger than what looks like is going on in the gilt. So I've talked about this before, is that if we are going to have a major crisis out of this area, I haven't even touched on the potential of what's going on a geopolitical level, but if we're going to have a major crisis, it's probably not going to be triggered from here in the U.S. Maybe it's the gilts, maybe that's it, maybe it's Japan. All I can tell you is it's going to be something different if this thing's going to come apart. And it looks more and more like the fabric is starting to tear here. On a short-term level, there is, I have a little bit of optimism that I'll share with you tonight, but on the intermediate and longer-term levels, there's just nothing going on. There's nothing to look forward to. What are we going to look forward to? The elections are in a few weeks. That's going to get interesting. We're going to start earnings. If these earnings reports are as bad as they could be, maybe the market's getting pummeled. We're coming into the election time. That's probably going to maybe set up the tone. But I don't think it matters if Republicans take over both houses and all that. I'm not sure that's going to be that positive, but who knows? Markets will come up with their own ideas on that. For at the moment, I haven't even started processing some of that information yet at the moment. But still staying short term, looking at the day-to-day movement, the stuff that's in front of us, CPI's in front of us, for today. Like I said, that's could come in hotter. If it does, they could crush this market. But it's interesting because they really didn't do a lot to the market yesterday. Like I said, we're trading right now. I'm looking at we're only up 2 now, 35.90 on the S&P futures, but but we're really stable here. We're not really pressing it. We had the opportunity to go to slam the market. We're not doing it. So let me just look at some of my notes here. Yeah, I think I've got everything covered. Yeah, so this is the thing. Just a note that I made to myself that I triggered me on another comment here is one of the things that could, if the earnings come in, the banks are going to be kind of front and center pretty soon here. And if they start to come in and their forward guidance and it just gets really messy, that could set up for the fire sale to get down to some of these lower levels and start to see some acceleration on the intermediate level. But I think, like I said, I think coming into those points, we might have a few days of reprieve. Looks like I covered everything that I need to cover here. So let's go ahead and get into database and get into tonight's presentation. Okay, so interesting output tonight. We're dropped again from 1770 yesterday, bullish, down to 1562. We're looking at the buys, 172 buys, 1,294 sells. So what little traction we were able to get has already faded, and we really don't, like I said, I have no expectations of getting any traction at all here, and we're most likely going to stay under 22%. If we get over 22%, then maybe we can get some consolidation. But right now, there's only, out of 16,000 symbols in our database, there's 2498 that have signals that are long, and that is as of right now. So a bunch of those are going to disappear from that standpoint. So we're going to see this thing liquidate down a little bit more here from that standpoint. There's really nothing else to say about the database other than it's been decimated. The intermediate database is also in bad disarray. There's really no reason to be looking for anything, actually. So let's go ahead and get into the technicals. All right, we'll start off with the daily S&P. And it's been interesting. I've been watching this. The triangles that you see here with the numbers, those are the STX numbers of the STX buys. It counts how many consecutive ones are in a row without an opposing RTX sell. And we're still kind of holding into this pattern, this low pattern. It's a little deep to call it a right shoulder here, but it looks more like we're trying to set up some sideways action. What's interesting here for me, and these algorithms, these auto regression algorithm here, the AR, is suggesting that we're going to see an uptick. Now, it was suggesting that for PPM 1 yesterday, and indeed it did turn up. We're at 0.1693 negative, and that number right now, the moving average is at 3670, and that's going to be major resistance with a but. And the but is that when you get to around 0.15, the market can get penetrated. It usually won't stay above it, but the next level above that is getting even worse. We're at PPM2 is a negative 0.47. There is some projections for this to go, but what happens a lot of times, if we get another down day, we're going to see all of these projections somewhat moderated. So I'm not sure there's going to be much validity. But when I open this up a little bit, you can clearly see that all of the moving averages have that angle of attack, which tells you major downtrend here. And I'm just tightening this up so you can see these red dots down here. These are the Fibonacci targets, and that's the numbers I was just talking about. Target 1, 3216, target 2, 2986, and 2843. Typically, I pointed this out. I drew some circles around these others. When we get this type of scenario in this, we don't hit this pattern. And especially if we do get these PPM starting to expand out, that will potentially set up a little bit of a minor bottom here. Like I said, we had the cycle come in yesterday. This is the actual cycle finder from the Wavetech indicators. And so we have that, but we're not getting any confirmation. Just because there's a cycle doesn't mean it has to work. And we need to get some confirmations. And about the only thing that is going to turn this market I won't even want to use the word bullish, but positive, we'll say, is to get up over this 3670. We'll look at the market grid for today. It's over on the far left-hand side of the screen. R1 is 3603, and we've already been at 02, so we've already printed R1. And the S1 is 73, so that's basically a retest of that 3571 number. And then we have 3558 is another pivot under there. So 3571 to 3558. Watch out for those numbers. Those are the things that's going to be the downside. If we do get blown up with CPI tomorrow, that's going to be the areas to watch for. And you can see also PPM3 right now is at a negative 0.4389. So there's nothing bullish on this chart. But having said that, that doesn't mean that we can't still get some more sideways chop, is really what we're looking at here. And I've been talking about this for a while, is the potential for some sideways chop. And we did hit, I believe, 3577 roughly is S1 on the weekly charts. So we're just looking at these things really in a sideways choppy range. And if we bust through some of these numbers down here, it could be literally everything could end up heading down towards some of these crazy numbers on the downside. Is those new fib targets, at least fib target 1 right now on the daily is for a 32 handle. So that's a pretty big number. And it's actually, the probabilities are at the moment aren't super high. They're only about 30% that we're going to hit those numbers. But having said that, don't expect much out of this market. We could get, like I said, maybe a number to challenge 3670. That's going to be it. Just looking at the grid again for a second. R2, 3620. R3 is 3637. There's that number. As far as I'm concerned, I'm seeing 3636 again. That's been a major pivot. We had a high yesterday at 3535. So that's a ceiling right now. I don't even know if we can get through those numbers. RXT tomorrow is 3652. So none of these numbers even suggest that on the volatility that we've been having, it's kind of calmed down a little bit in the last couple of days. That's been significant. I'm going to go through something here. I believe I have it up. I do. I want to talk about, this is really kind of an interesting story, and this is not really contrary to what I'm telling you. I'm telling you that there could be some consolidation and rally here. I want to show you something, and we'll find out if what these algos are made out of here. But I'm going to bring up next, this is actually the VIX, okay? And the VIX is printing 3358, and we have some projections. So there's some mixed messaging here. Let me go full screen. So the messaging is that we have fib targets for a VIX of 40, and then 43. Let me just bring this up down below here. 40, 74, 45, 42, and 48, 30. But this is I think the interesting thing that I wanted to show you. And I showed this in the live room today. We kind of stumbled onto this looking at the VIX. But all of the PPMs, the algo is suggesting that the PPMs are going to decline. In fact, the PPMs are suggesting that the 10-period moving average of the VIX is going to decline substantially. And there's also some kind of hard to see with all this stuff. Let me just spread it out a little bit. Maybe you can see this. It's kind of, there's a lot going on here. But there's some fib targets on the downside, 29, 27, and 26. They're embedded in this pattern here. And that's right above the 200-day moving average. So that is kind of interesting. And I talked about something else. You can see this is not the 50. I know the Golden Cross is a 50 and 200. This is a 40 and the 200. But they crossed. And when I see this type of cross, typically this is more of a high than a signal. A number of years ago, we ran basically, and any of you that have, if you have some basic skills, and you could run the Golden Cross on how accurate this is, it's really terrible. It really doesn't do well, the cross of the 50 and the 200. There's times when it works really good, but it's not a good trading indicator, let's put it that way. And there might be a few days of action that'll happen, but this is an interesting chart, and I wanted to bring this up tonight because this is contrary to the market collapsing, right? So this is saying the VIX is going to come down, and the VIX has acted somewhat funny because we haven't really taken out the highs, but we haven't really printed through the lows. The cash markets printed a new low yesterday, but the futures have not. And so this whole pattern that's setting up here, and I think this has been going on. I'm just going to say it's been going on for the last couple months, and especially through September and now through at least half of the month that we're through so far, is there's been a lot of conflicting patterns that are setting up. And it's just one of those markets that are just crazy. You remember all the puts that were out there that everybody was buying, and roughly out of that, we got, a 6% rally that it just fell apart again, and we're basically back to where that rally started again. So we're not going anywhere. It's really chop, and if we can get some follow through, maybe CPI comes out and they blow up the market tomorrow. That would be, I guess that would make it really easy. So that's probably not what's going to happen, because it's never easy, and that would be predictable maybe after today. But like I said, I'm just going to argue that the action against the hot PPI was pretty muted. And I mean, it still is. We've got a slight bid in the markets right now. So I just don't, everybody's waiting for this number. We'll see what happens tomorrow, and it should be interesting. And I think we'll find out a little bit more about the character of this market going forward, not just to the end of the week, but coming into next week, and start to set up for really the bigger pattern, which is going to be coming into the earnings cycle and all that we're coming on. And like I said, we just got a ton of stuff. Okay, I didn't mention this. I'm just going to throw it in here, but Russia's back on the offensive again, and I think a lot of the news is misleading to the point that what's going on there, and it's really really difficult, because I was talking about, I saw the former ambassador to NATO and she's still living in Brussels, and it was ridiculous what she was saying, that not only will we defend Ukraine. I'm not saying I'm not judging that, but she said we're going to have to rebuild Ukraine. So Ukraine's going to get a brand new country. I know it's really messed up, but it looks like it's going to get just rebuilt. That's considering that other things outside of what the West wants doesn't happen and things don't escalate. It seems like to me that probably should be a negotiated, at least try to negotiate, right? Every war, even World War II, they at least attempted it from time to time. But anyway, really not a political statement, but it's just, we have all these things that potentially can go on. So I'm going to go pretty fast through the rest of tonight's video. We should be able to get through everything because most everything I set up pretty good in last night's video, especially with the currencies and the 10-year, but I'll update everything. So let's go ahead and get in there. So the NASDAQ is very similar. I did put the cycle finder up here, and we did have a cycle yesterday, so it's going to be very critical. We are trying to get one of those little bubble bottoms here. Same forecast on the algos that we're seeing on the S&P, where it's suggesting that we're going to get a couple of days where the PPM is going to go up. It's actually saying that the 10-period moving average is actually going to turn up a bit, and the PPM2 is also forecasting. But at the moment, these are big downtrend numbers. PPM1 minus 0.34, PPM2 minus 0.46, and minus 0.55. So this angle of attack that I talk about all the time, I'm just going to expand this out so you can see the white line, the red, and the cyan as 10, 21, 40. These are all really down. And maybe instead of this being a cycle low, it's a mid-cycle that's telling us that maybe we're going to have another leg down from here. The only thing I like about this is how the grid is trying to turn up here. The forecast is for at least another day or so of increasing PPMs. This is across the board, actually, on 1, 2, and 3. And even the 200 looks good. So there's a very good chance that we could go into this massive sideways range. But the resistance right now, 11,166 is the 10-period moving average. And if we look at the market grid for tomorrow, we're looking at right now, let me just move this around so I can see the current prices. Yeah, right now we're looking at R1, 10,895. We've actually almost there, 10,878. So R2 is 10,957. S1, 10,785. And I would use that S1 on the downside as a pivot. We take that out, that will signal lower prices. But overall, looking at these, at what the algos are telling us, that's probably not what's going to happen. There's probably the worst case is that we go into a little sideways chop here, maybe burn off some of this downward momentum. There's not a lot to be optimistic about. I hope I made that clear. Just this is price action. I wouldn't really be taking on a lot of risk at these levels. And if you're not short and holding a position, it'd be pretty tough to get short down here. But the long position can also be equally as risky. So be very cautious here. The one thing that we did get, and I was going to point this out, couple of days ago, we did get 4 STX signals. We got that. We've had that at other previous lows, and especially with the PPMs trying to turn up, this could be like a little minor low that's setting up. And I think what I'm trying to put together here tonight is I'm trying to tie together that what the algos are telling us, and then trying to look at the patterns and see what kind of validity there is. That VIX looks really interesting to me, and I had I was shocked when I looked at what the algos are suggesting, that the VIX is going to turn south. So maybe that's the case. So be prepared for about anything. Be quick, whatever you're doing tomorrow. All right, looking at the RTY, we're seeing a similar type situation going on here. We're up 3.3 on the session right now, 0.19%. We had these Fibonacci targets above here. I talked about those last night. A much different formation here on RTY. It's just there looks like there's another day up of the algos, and then there could be a quick turn. So maybe this one has got it right, but we're in this sideways range. If we look at the market grid, the extreme is going to be STX is 1650, and on RTX is 1735. And just looking at the 10-period moving average is 1718, and the 21 1730. So the RTX today puts us right into major resistance. All right, we'll look at the treasuries. We'll go over to TradeStation for this one. I've been talking about these numbers, starting to get, they're a little silly. 5.03 target on the 10-year, but that is off in the future here. It's interesting that PPM1 is trying to turn up here. PPM2 is flat, but in an uptrend. They're 0.52, 0.62, 0.79, and these are the dailies. So what we're looking at here right now is that let me bring up the grid so you can see it here. We're looking at right now, the S1 is I got to get to the right day. S1 is 388, S2 386. I talked about the possibility of going to 390. We already did that. The high RTX is 396.7. So we should start to see this thing flatten out here a little bit. And I think I mentioned this in going to the weekly chart just for a second here, is the weekly. I really think what we're going to see here is a high level consolidation. The downside here is as low as 380, the possibility of 372 again within this pattern. And this box formation that's showing up here on here is likely to be in place for multiple weeks. So it may not be that we have a lot of action here out of the treasuries unless, and I'm not going to cover the currencies tonight, unless the potential for the yen to hit that 148.5 and then maybe trigger some heavy selling of treasuries. But it's getting harder and harder. Just a quick comment on this. It's getting harder and harder from the standpoint of to finance the debt. I think I think we're well over $1 trillion a year in doing that. If we went to 502, we might be at close to $2 trillion to service the debt. At some stage, I keep saying this, and we had a not so good auction on the 10-year today, but at some stage we have a disastrous auction. Not that nobody shows up, but maybe that's the case where they have to offer this thing down to get some money in there, and that would be a pretty big disaster as far as I'm concerned. And then we would look at the lack of activity there. Typically, they get a 2.5 to 3.5 coverage on these auctions. And when they start to get to 2 or 1.5, they're getting pretty tight. I haven't seen those type of really bad auctions. We could go back to the beginning when I started in here back in 81, 82. There were some pretty lean auctions back in the day. And we haven't seen anything like that. Everybody's been wanting treasuries so bad. That's been the case. And a lot of people, it's amazing that we went up to these yields, because some of the things, if you're trying to get any kind of yield, maybe the treasuries seem like the safe bet. They may not be, but we were looking at a number of things in the live room today, the high yield and some other things. The equity markets, and if you flip this over, if we went into and looked at the 10-year, matter of fact, let's do that real quick here. Yeah, if we look at this chart here, let me go full screen. If we look at this chart here, what's interesting about this, it looks just like the equity chart. We kind of retesting the lows, and I talked about this in the live room today. It looks like as the treasuries go, so do the markets. So if I'm right about this maybe pullback here, we have a little bit better position, maybe not that great, but for more of a stabilization here, which might be enough to see equities catch a little bit around these levels again. So it feels like, it's really easy to get very, very negative down here at these levels, but it feels like to me that maybe we get some type of trading that's interesting, that the 10 and 21 period moving averages right now, just on the 10-year futures, the 10 is at 111.31 and 12.18, 112.18. And so they're very, very similar. And our last trade here is 111.09. So we're trading right into that 10. We get above that, then the next level would be up to about 114. And if we brought that into the view of what that would be in yield, that would probably be that 380 bid, something like that. That would be a 380 yield, not the 370. So it's fairly realistic that we could see that, and just a little bit of a reprieve here in the treasuries. I think these things are hooked like I've never seen it. Used to be that there was some kind of non-correlated, right? Bonds would go up and markets and the equities would go down. That correlation, and I've talked about this before, if an advisor is doing 60-40, you're just getting ripped on this trade. And so everything's going hand in hand. The good news is, if this does happen and we catch a little bid, then they get some reprieve, because the bonds will go up and so will the stocks. But it's not at some stage they will split away. And so, but for right now, it's really interesting that the 10-year and this could be, matter of fact, let me just put ES up here so you can just see how this works. You can see it. So the bonds have a more steady slope down, but the pattern here at the end is very, very similar from that standpoint. Let's put it back up here again. Yeah, the bond decline is very steady, but this last little shoulder is very interesting. And this has really been the lead, as far as I'm concerned, on the equities. So this may be, these are a place to show up. Boy, that bot keeps coming tonight, huh? So anyway, folks, yeah, so that's basically the setup from the standpoint of what's going on with the 10-year and the equity markets. Like I said, they're just locked solid and highly correlated in direction right now. And I don't see that that's going to break away, as the charts are similar. Equity charts actually have, from the algos, actually have a better potential setup. But this is something we're just going to have to watch, and we're going to get a lot of answers tomorrow, in the next couple of days, exactly what to expect as we come into earnings and other things next week. Okay, we'll take a look at crude oil here. Crude oil is trying to set up a bit of a right shoulder. It looks like there's going to be some more backfilling. And one of the things, I'll bring it up here in a second, is XLE, if you're trading the stocks, acted a lot better than crude oil did. And the slope here that we actually have a positive slope. ppm 1 is at 0.68. So there is an uptrend in this crude, and we're trading right down to these levels here from the standpoint of where the support's going to be. We're trading down toward we've got a low. This is overnight prices here, 86.99. We're looking at 86.46 is S1. S2 is 85.55. I don't think we'd get much below that. R1 right now, 88.08. We've had a high of 87.55. So that's going to be, I think what we're setting up here is a potential of a little right shoulder here. And that would set up, those of you who've been in a live room, like one of those 1, 2, 3 setups. I'll actually draw that in real quick, bring up the XLE, and then we'll just move forward from here. Let's take a look at this. Yeah, so the setup would be something like this, is we'd get like a right shoulder coming in here, come into this moving average, and then we'd move that up. Let me just clean that up. So the next move from here would be a move up. And it's interesting, and I've talked about this before, is we have the 200-day moving average is actually up. The algos aren't super, I would say, super bullish, but it does look like after we get in, this pattern could take multiple days to set up. And I've talked a lot about the whole scenario there of what's going on with this. If I go over to a weekly chart here, and I forgot about that. Sorry. That really hosed things. One of the issues I have with TradingView is the scaling, especially if you have these patterns on here that I'm doing. But yeah, so this is weekly. And like I said, the interesting thing is the weekly has a much better profile than the short-term daily. So it's looking like we're starting to get some pretty serious traction here. So let's go ahead and put on XLE real quick. So you can see XLE had ended up, this is weekly. Let me go to daily here. XLE had also in this downward pattern here, over here on the September 22nd, actually got a 4 STX buy. We have a pivot down here. We actually held the pivot range, and now we're setting this up. So what happened is we've exceeded. We see the PPMs go up. Looks like they want to correct, but PPM 2 will kick in, which is going to be the support around 70, 77 here, and then the chances of getting another leg up here is pretty substantial. So I guess with eventually they're going to run out of oil to sell in the SPR, right? They've already drained over a third, almost a half of it. I think right now, folks, we have something like somewhere between 14 and 20 days supply in emergency. And this is all for politics trying to get oil prices down, right? Let's face it, not that they don't need to get down, but that's not going to work. And yeah, so I guess the latest, and you folks probably saw this too, is with some of the proposed sanctions on aluminum. We saw like AA blow up today. Alcoa actually had a really good day. I think it was up 5.3% or something. And I saw that this morning and said, yep, they're going to pop aluminum. They're going to pop anything associated with it. So there's another inflationary trade. Aluminum's everywhere. So they're just, the more that they dink around with this thing, the worse it gets. And yeah, so a very sad condition that we're in right now, folks, as far as the war and trying to keep taking and block Russia. They're just going to sell the aluminum to China and India, and that's just going to, they're going to do better. So it just, nothing's going to change that. So unfortunately, my opinion, this is somewhat of a, maybe not really political, but my opinion is what they're doing by all these sanctions on Russia is they're bifurcating. So the BRICS might end up to be a real deal and have something to say about a lot of things that go on this planet, because they're forcing this consortium together. And that's what happens when you have idiots running the planet. So anyway, we know that to be the case. All right, next we'll look at gold. This is daily gold. Everything's starting to just suggest we're going to stay sideways. I've talked a lot about this pattern. We have downward projections now. We have big projections down to the fib targets right now. Low target is 1614, 1567, and 1537. I think we've got a cluster of numbers here around this 1620, 1617. There's certainly a possibility. I'm not covering the Dow tonight, but it certainly could be the saying of the straw that broke the camel's back. That's going to be too much, and we'll get another leg down. Algos are just suggesting sideways, stable, maybe some down, but more status quo of what we've been seeing here for the past several weeks. Finally, we'll cover Bitcoin. Bitcoin has continued to do this sideways pattern that I've been talking about for a while, and we're just seeing it stay within the range. The market grid is right now we're looking at S1 19063. The low is 1914. So basically just a little bit below S1 overnight. And we're looking at S2 at 18,960 and S3 18,556. That goes back to what I've been saying here is 18,555, 18,2 are big numbers. Below that, we could see some pretty substantial downside there. Just real quick on a weekly level. Yeah, when I have these indicators on, let me get rid of something. This will probably fix it really quick. Yeah, that helps. What's happening here is, I hadn't seen this. I didn't have the cycle finder. I put it up in the live room today. So it's interesting. We have a cycle coming in on this is weekly last week, and the PPMs are still quite negative, minus 1.9 1.97, ppm2 minus 2.36. Anything over under 0.25 negative is a trend. So these are mega downtrends that are happening here. And then on ppm3 is 1.85. So all of these angles are suggesting there's a lot of resistance here. We're looking at the 10-period moving average at 20,303. So that's probably your ceiling at that time. So there's really amazing story, I think, building here. And somebody pointed out last night that Bitcoin went sideways like this, and that's right what it did before it collapsed. And I remember that scenario, and we really, this is a much different scenario here. I'm not sure why it's holding up. I guess just all the uncertainty that's out there, I think, is really what's driving the sentiment in Bitcoin. It's not really bullish, it's not negative, it's not anything, but the downward pressure on the weekly patterns are very substantial. Okay, folks, that'll do it for tonight. And as always, I'll be back tomorrow night. It's hard to believe is going to be the final show for the week on YouTube. How fast things go, right? It's just crazy. Those of you in the live room, I will see you there at 1 o'clock. Just remember, you can get the indicators and get 30 days in the live room, and that will be it's a fun place to hang out. So we get to do a lot of things behind the firewall that we can't do publicly out here, and so join us. Hit that link go to that link, www.kendallreport.com/indicators, and join the group. I hope to see you there. So that's going to do it, folks. Thanks again. Have a great evening. I'll play some music here at the end so you can chat it up. I enjoy seeing what you folks have to say after I finish. So thanks a lot. And make sure you like and subscribe and hit the notification bell. Have a great evening. Have a good day trading. See you tomorrow night.